Well, 192,000 jobs were added in the private sector last month. That's according to the ADP report. And we also had an upward revision for the month of March. And this comes ahead of the jobs report out on Friday, with the Bureau of Labor Statistics estimating 240,000 jobs added in that upcoming print. To break down what the ADP report means for the broader economy and what the jobs market is looking like right now, we have Nela Richardson, ADP chief economist, here with us. Nela, thank you so much for being here. I got some information from our reporter Josh Schaefer, who was on the media call with you this morning. He says that while everyone is talking about what inning the Fed is in, you prefer to look at what yoga pose the Fed is in. So talk to me about what that pose is and just how long they'll be able to hold on for.
Hi. Thank you for that question. I think it sets this up really nicely. I think it's a tree pose, and here's why. It looks deceptively simple, holding that pose. It looks like you're just standing on one leg, basically. But the longer you hold it, the more difficult it is. And eventually those muscles start to tense up, they start to shake. And I think that's what we're seeing from the Fed right now. Yes, they have some ability to be patient and keep rates where they are right now and still hopefully see inflation start trickling back down to that 2% target. But the longer they hold it, the more pressure they're getting from consumers, the more pressure they're getting from Wall Street, the harder it is to maintain the position. So it's a difficult situation to be in, even though the Fed can be patient when it looks at the economy, when it looks at the demands from consumers and Wall Street, the position is getting more and more tricky.
How much of that is because of wage gains, do you think, up until this point? And at least with the report that you put out this morning, a 5% gain in wages was actually the smallest that we've seen since August of 2021. So is that upside pressure there maybe starting to ease a bit?
Yeah, pay growth has come down. It's come down a lot, and we are able to match individuals with themselves. So these are not cohort effects. It doesn't matter what industry was hiring. We are measuring Sally's pay this year versus Sally's pay over the last 12 months, and it gives us a very vigorous sense of what pay growth is doing. And that 5% is low, but we've seen it start to plateau. It's very similar to what the pay growth was in March. We're not seeing those steady step down declines. And it reminds me of where we were in the first half of 2023 when pay growth moved sideways for a period of months. Is that a return given the strong hiring that we're not going to see the same type of deceleration on pay that we've experienced over the last 6 months?
I keep wondering, Nela, whether or not the Fed ever has to necessarily care about this bifurcation that we're seeing. It's not necessarily part of their dual mandate, but at what point could that bifurcation in higher income consumers continuing to do better and better start to weigh on our economy in a way that could be significant for the Fed?
You know, I think the Fed cares a lot about the distribution of their policy effects. I think they care about whether savers versus investors are able to take advantage of whatever interest rate position. Remember, when we were at rock bottom rates, savers, and a lot of them are retirees, weren't benefiting in terms of their savings rates in their bank accounts. And so I think they care a lot about it. And it also justified for a long time leading into the pandemic, keeping rates so low because they were starting to see pay growth at the bottom end of the pay distribution, and they cheered that. Now, if we fast forward to after the pandemic and 3 years post this recovery, what you're seeing is that, yes, low income, low pay workers have been doing great when it comes to the rate, but not so great when it comes to the level. So their pay is still not quite keeping up with the higher price levels that we've seen that was just detailed. It's close to lunch in a really great way. They're seeing all the prices go up when it comes to rent and food and gas. And so pay growth is not meaning and translating the same on Main Street as it is in terms of our big picture monetary policy.
All right, Nela Richardson, ADP chief economist, thanks so much for making the time to talk with us here this morning.